This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Up, and away. The Dow closes above 23,000 for the first time ever, and it is led by an unlikely stock, IBM.
Stepping down, longtime American Express CEO plans to retire early next year, and the stock initially falls.
Housing headache. There aren't enough houses. There aren't enough workers to build them, and the problem appears to be getting worse. Those stories and more tonight on Nightly Business Report for Wednesday, October 18th.
Good evening, everyone, and welcome. The Wall Street bull pushed its way through a big round number. For the first time ever, the Dow closed above 23,000, one day after briefly touching that level, and it did so with confidence, surging triple digits. This is the blue chip index's fourth 1,000-point milestone this year. IBM played a big role in today's advance. Shares of Big Blue soared nearly 9%, its best day since 2009. On the back of its quarterly results that we told you about last night. Solid earnings and improving global growth have also contributed to the market's seemingly uninterrupted rally. When all was said and done, the Dow Jones Industrial Average gained 160 points to 23,157. The Nasdaq rose just fractionally, and the S&P 500 was up nearly 2. Bob Pisani takes a look at why nothing seems to scare the Dow.
Stocks seem to be racking up record highs by the day. Here's an amazing stat. The Dow's moved 5,000 points in 18 months. That means the Dow has advanced 1,000 points on average every 3.6 months. At this rate, we'll hit Dow 24,000 at the end of January, and we'll be celebrating 25,000 in the middle of May. Sell in May and go away? You didn't hear? That doesn't work anymore. The markets keep rallying because everyone has come to believe that all the problems of the market will resolve itself. Why? Because it's worked so far. Under this logic, the market believes there's not going to be any real conflict with North Korea because everyone believes the Chinese will work with the U.S. The market believes tax cuts will pass because everyone believes the market impasse will somehow be resolved. The market believes the record earnings will continue because the global economy will keep expanding and tax cuts will add another 2 or 3 or 4%, pick one, to earnings next year. And finally, and most importantly, the market believes the Fed will not make any policy error because everyone believes the Fed will remain just dovish enough not to rattle the markets. Call it stoner logic. That's what I call it. Dude, chill out. It's all going to work out. And maybe it will work out. But my bet is that the biggest risk to the market is the last one. The Fed overshoots its target. Normal market cycles have been disrupted by the great ocean of liquidity that the global central banks have provided. And who knows what will happen when that starts to recede. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
As we told you earlier, IBM's stock soared nearly 9% today, despite being down about 4% for the year. Some investors are betting that the worst is behind it, but is this really a turning point for IBM? David Holt is an equity analyst at CFRA Research, and he joins us now to discuss. David, welcome. Good to have you with us. IBM has been a wounded duck for a long time. Is it now a swan?
You know, really after looking at Q3 results and digesting those, it's really a step in the right direction. We saw some positive momentum and recovery from key segments that have been lagging in the past. But really it comes down to, if that momentum can carry through to Q4, that could definitely set the stage nicely for 2018.
And you think that some of this has been overlooked by others in the market, correct?
Yeah, absolutely. I think the overall theme has been overlooked by many investors. But really, when you kind of look at it, this actually led to our upgrade, in July 2017 from a hold to a buy. We saw signs of that stabilization from those lagging segments, solid growth from strategic imperatives, which have definitely delivered in Q3. Again, questions do remain, if that can carry through, but we are believers at this time.
You've got a buy on it. You got a $175 price target on it. What takes it there?
What takes it there is, consistent execution, strategic imperatives, delivering at least high single-digit, growth, as well as that recovery again, from those key segments, whether it be consulting or technology solutions.
You say that cloud, I'm just looking at my notes, you saw cloud growth rise 20% in Q3. Do you think it will carry over into the next quarter?
You'd hope so. Really, whether you look at it kind of to the back half of 2017 and definitely into 18, just that normalized level of at least high double-digit, mid double-digit growth, as long as that's intact, I think you could definitely see some positive progress from the company.
I'm going to put you on the spot, David. In your coverage universe, I have no idea how many stocks you follow. Is IBM in the top quartile right now of your choices? Is it one of your favorites?
Yeah, I would definitely say it's compelling. Look, you have a rock bottom valuation trading at about 11 times 17 or 18 earnings, in a pretty lofty market, yielding about 3.5%. Definitely a defensive play if you, catch some market volatility into 18.
All right, David, thanks. Thanks very much. David Holt with CFRA.
Thanks for having me.
You bet. Thank you.
The CEO of American Express will step down early next year. Ken Chenault has served as chairman and CEO since 2001 and is one of the country's most prominent African-American corporate leaders. He will be succeeded by Stephen Squeri, an American Express veteran who was in charge of corporate cards. The move follows a difficult period for the company, which saw the loss of its Costco partnership and increased competition from J.P. Morgan's Sapphire Reserve card. Late today, the company reported a rise in quarterly profit as loan growth helped to offset a rise in costs. Now, if you look at the chart, you can see the immediate rise in the stock when the earnings were released, and then the initial decline in the stock when the CEO announcement was made.
Investor attention today also turned overseas, where China's president spoke about the world's second largest economy at the country's key meeting of the Communist Party Congress. Eunice Yoon reports from Beijing.
President Xi is ushering in a new era for China, mentioning the phrase new era 36 times today. In his 3.5-hour-long speech, the longest for any Chinese president at one of these congresses, President Xi praised the party's achievements over the past 5 years and outlined his vision for the next 5 years in his second term. In his work report, he said he sees China's future as socialism with Chinese characteristics. He signaled that there would be no political reforms, that the party would continue to fight against corruption, and that China would reemerge as a mighty force on the world stage, politically, economically, and militarily.
Today, compared to any time in our history, we have never been this close to, or confident and capable of, realizing our grand mission of revitalizing our country and culture.
On the economy, President Xi continued to present himself as a defender of globalization, saying China would become more and more open. For foreign investors, he promised greater market access, faster opening in services in the financial sector, and pledged to protect their rights and interests in China. Despite those pledges, many China watchers believe President Xi still favors a state-led approach to the economy. In his work report, President Xi promised to reform the state sector by making them stronger, better, and bigger. And it's that last word, bigger, that raised flags among many foreign investors who've been hoping to see the state sector withdraw from the economy here. For Nightly Business Reports, I'm Eunice Yoon in Beijing.
Economic activity here in the U.S. is growing despite the impact of the hurricanes. The Federal Reserve describes growth as somewhere between modest and moderate in its latest snapshot of the economy, which is known as the Beige Book. The report did show little evidence of inflation despite the tightest labor market in years.
And that tight labor market is a problem now for housing. Starts dropped more than expected in September. While some of that now can be attributed to the hurricanes down south, the real problem nationally is an acute labor shortage, and that's only getting worse because of those natural disasters. Diana Olick explains.
The number of Houston homes destroyed by Hurricane Harvey surpassed the number expected to be built in the city in all of 2017. And in California, the damage isn't done yet. If the labor shortage in this country was bad before, it is now acute.
All of the resources are being drained to the rebuilding effort. That's going to increase the cost of housing and renovation across the nation.
Just after Hurricane Harvey, the chairman of the National Association of Home Builders implored the Trump administration to ease up on immigration, saying a successful guest worker program will help alleviate the current labor shortage in the residential construction sector, quicken the rebuilding efforts in Texas, and support the overall economic growth of this nation. So far, no answer.
The housing market can't take the shock of a natural event. It can't take any shock. It's because we are so tightly wound with inventory, any change is a big change.
The number of existing homes for sale nationally is at a record low, and single-family housing starts like this one are still 19% below their historical average. Curiously, home builder sentiment jumped this month despite drops in both new home sales and starts. In that release, even the NAHB's chairman warned his own constituency that there would be more difficulties ahead. For Nightly Business Report, I'm Diana Olick in Washington.
Well, to read more about the labor shortage in construction, head to our website, nbr.com.
Still ahead, on the eve of the 30th anniversary of Black Monday, investors are wondering whether a crash like that could happen again. House Speaker Paul Ryan opposes a short-term fix to shore up the health exchanges under the Affordable Care Act. A spokesman for the Speaker said he believes the Senate should keep its focus on repealing and replacing the law. As for the president, he initially signaled support for the bipartisan deal, but appears to have reversed course over concerns that the agreement might benefit insurance companies too much.
We'll see the bipartisan. We're going to see the bipartisan, and Lamar Alexander's working on it very hard from our side. And if something can happen, that's fine. But I won't do anything to enrich the insurance companies, because right now the insurance companies are being enriched. They've been enriched by Obamacare like nothing anybody's ever seen before. I am not going to do anything to enrich the insurance companies.
Separately, 19 state attorneys general are asking a federal judge to force the White House to make the health care subsidy payments that the president abruptly halted last week.
President Trump's recent executive order could usher in health care changes. The most significant might involve more short-term insurance plans that offer fewer benefits than were required under the Affordable Care Act. One broker, for instance, is already offering new choices for consumers looking for cheaper options. But as Bertha Coombs reports, the plans are not without risks and gaps.
John Conley has friends who benefited from Affordable Care Act plans, but the 45-year-old Bentonville contractor says he earns too much to get a subsidy and not enough to pay for premiums, which have tripled from $190 to $670 a month.
It became too expensive for me to afford, and it made us have to get creative in the way we approach buying health insurance.
Online broker eHealth says it's a problem for many of their off-exchange customers. So next month, it's launching limited coverage plans in partnership with 2 private insurers, targeted at consumers looking for cheaper coverage.
It's a combination of short-term insurance, a gap insurance, a fixed indemnity.
eHealth will streamline the billing and filing of claims.
It's one place to manage all their benefits, so we're trying to do the work for our customer. President
Trump's executive order this month could pave the way for more of these short-term limited coverage plans in the off-exchange market. Under the ACA, they're intended for people to use between jobs or outside of open enrollment. This year, they were limited to just 3-month contracts. Still, some consumers are finding ways to use these plans as their full-time health insurance.
It's a temporary plan. I think it renews every 3 months. And the health insurance plan, it's a pretty standard 80-20 plan with a 20% co-insurance, $1,000 deductible. I added dental and vision to it, and it cost me about $150 a month.
The plan also has a lifetime cap of about $1 million. Healthcare advocates caution that that type of coverage can leave consumers underinsured in the event of a major illness like cancer or a major heart attack. And it does not include Obamacare protections for pre-existing conditions.
For individuals that can afford an Obamacare plan, that's what they should buy. That's a major medical, it's a guaranteed issue, it covers everything from maternity care to mental health. Our plans cover less, but they're also at about half the price.
But because the plans are non-compliant, enrollees could also be on the hook for the Obamacare penalty for not being covered at tax time, a risk John Conley's willing to take.
I'd rather stay out of the the government insurance, and I can keep that money in my pocket through the year and use it for myself.
For Nightly Business Report, I'm Bertha Coombs.
Wholesale revenue jumps at SuperValu, and that's where we begin tonight's market focus. The supermarket operator posted an overall loss, but backing out a tax charge and acquisition costs, adjusted earnings beat estimates by a dime. SuperValu said its recent acquisition of Unified Grocers contributed a big chunk of that revenue gain. But SuperValu said it isn't done, saying it is buying Associated Grocers of Florida, which is a retail food distributor. Still, shares lost nearly 11%, closing the day at $17.09. Profit and revenue grew at Abbott Labs as rising sales in the company's medical devices and generics business helped its results. The company also lifted the top end of its full-year earnings outlook range. Shares of Abbott Lab were up 1% to $55.77. And Spectrum Pharmaceuticals reported encouraging preliminary results from a study of its lung cancer drug. The biotech company said all the patients who were given that treatment saw some degree of tumor shrinkage. Spectrum shares rocketed higher by 36% to finish the day at $19.67.
The insurance company Assurant said it is buying the protection plan provider The Warranty Group for $2.5 billion, including debt. Assurant said the deal will grow its global footprint, add to its existing services. Assurant shares up 6% to 101.80. After the bell, United Continental reported stronger than expected profits and revenue despite facing business disruptions from those storms. Shares of the airline initially rose in the extended session, but then fell. They ended the regular day up fractionally at $67.99. And eBay was also out with results after the bell. Sales at the online marketplace grew in the latest quarter as the company attracted more active buyers to its platform. Those results beat estimates while earnings fell in line. Shares were initially lower, as you see there in after hours, but finished the regular day up more than 1% at $37.97.
Well, the Dow's first close above 23,000 comes nearly 30 years to the day since Black Monday. The blue chip index drop of roughly 23% remains the biggest ever, and many investors are wondering if it could happen again. Dominic Chu takes a look.
The investing world today is a lot different than it was back in 1987.
The Dow off more than 500 points. Paper losses more than $500 billion.
But that hasn't dampened the debate over whether another market crash like Black Monday could happen again.
Should I sell more? With respect to the massive drop that was seen on Black Monday, it is obviously of a very low likelihood, but we would never say that it couldn't happen in today's markets. In fact, there are a lot of factors in place that, if anything, make it potentially more likely than it would have been back then.
Among the factors that could make a big market crash more likely, well, the rise in electronic computer-based trading that has accelerated the pace of the market action, as well as that move towards index investing and exchange-traded funds, or ETFs. If everyone is in the same investments, what happens if everyone wants to sell at the same time? But there are also a lot of reasons why we won't see a big market crash anytime soon.
The first is that there's still massive liquidity in the system. Even though the Fed looks to be potentially raising rates in December, the U.S. is still supplying liquidity at a massive pace. Same thing for Europe, same thing for Japan, same thing for China. Second thing is the aggregate global economic picture is strong and improving.
Trading systems and safeguards are much more efficient and robust today than they were back in 1987, and the recent trend has been for investors to continue to buy even relatively small market drops. So, could another Black Monday happen? Of course, anything is possible, but most on Wall Street don't think it's a likely scenario. For Nightly Business Report, I'm Dominic Chu.
Coming up, falling in love or falling for a scam? Now that's a tease.
And here's a look at what to watch for tomorrow. Weekly jobless claims will be out. They give us an ongoing look at the health of the labor market. We'll also find out how manufacturers are feeling about business activity. And more big-name earnings are due out with Dow Components, Verizon, and Travelers reporting. And there you have it. That's what to watch for on Thursday.
And Ford will recall more than 1 million trucks in North America to fix a door latch. That fix is going to cost the automaker more than $260 million. It will be reflected in fourth quarter results. The door latch issue is on some F-150 and F-250 trucks.
Not even billionaires are safe from scammers. Sir Richard Branson, the founder of the Virgin Group, was the target of a fraudster posing as Britain's defense minister, Michael Fallon, who tried to get him to contribute millions to a supposed secret ransom payment. Branson was told that a British diplomat had been kidnapped and was being held for ransom by terrorists.
The government weren't allowed to put up money for blackmail and for extortion. And he was coming to a number of businessmen to put up $5 million each to get the person back out again. And fortunately, it was very real. But I double-checked and found that Sir Michael Fallon hadn't phoned me.
Sir Richard Branson suspects the same person had later impersonated him to steal $2 million from a friend of his by pretending to raise funds for hurricane victims.
Another well-known scheme is one that involves a Nigerian prince. It's been going on since even before the internet was a thing. But now the game has changed. Cyber criminals are hooking in victims and stealing their cash using far more sophisticated methods, and they're raking in billions. Andrea Day takes a look at why investigators have their eyes on West Africa and why you should too.
The same language was used with one person after another.
Just take a look. According to investigators, these are the scripts con men used to reel in lonely victims.
It didn't matter if it was male or female.
The script, she says, blasted out on dating sites, strategically designed to start relationships and keep them hooked. I'm totally new to this online dating stuff. I feel as if you are right here beside me.
There are hundreds, thousands of people out there who have been defrauded.
NJ fell hard for a man who called himself Sam West.
It was like we knew each other.
He said he was living overseas for work, but West was not who he said he was.
I felt real embarrassed.
We found the real Sam West, a former government agent whose name and location were used in the scheme. We're keeping his identity secret.
It still impacts my life years later.
NJ and West, both victim to a multi-million-dollar Nigerian crime ring, according to prosecutors, operating in the U.S. for years.
Nothing would have happened to them in Nigeria for doing these crimes because it was Americans who were their targets.
The scheme uncovered all the way here in Gulfport, Mississippi, after NJ's online boyfriend sent her a box filled with cell phones and told her to ship it to Africa. That's when she called police.
That one phone call took down this massive fraud network.
Department of Justice attorney Connor Mulrow and Mississippi Southern District AUSA Annette Williams.
We're a small branch office in Mississippi. Everybody's like, what the heck are you doing in Mississippi with this stuff?
What the team discovered? Loads of other victims across the country, all conned into working for fake boyfriends and girlfriends.
360 email accounts. 1 million emails.
A virtual network of American emules, as investigators describe them, trapped by this romance scam and other methods. And she says those mules were then shared by the entire Nigerian organization.
Do you have somebody that can move this money for me or mail this package for me? And they'd say, sure.
Investigators say the victims unwittingly helped carry out a bunch of money-making schemes, like cashing fake checks and shipping goods bought with stolen credit cards, and ultimately wiring the laundered money back to Africa.
It probably moved through 4 different hands before something went overseas.
And the Nigerian criminals? Investigators say living large by local standards. Homeland Security Investigations Agent Todd Williams.
Bragging about the money that they were stealing from Americans.
Investigators spent years tracking down the criminals behind the con. And that's when they found the real Sam West, unknowingly mixed up in the scheme.
I was overseas on a government assignment, got a call from my wife that someone had come onto our property looking for me.
And she wasn't alone. Other victims sent letters, all in love with a man they never met.
They were asking, why aren't I hearing from you? What do you want me to do with the clothes, with the laptop?
That Nigerian organization was recently taken down, with 12 pleading guilty and 3 others found guilty at trial. 4 are still at large. But experts say the con game is far from over.
That's just the tip of the iceberg.
It is.
West Africa, according to security expert Mark Noonan-Coven, a growing hotbed of fraudulent activity.
It seems far more collaborative. Cybercrime is a team sport there.
A group effort, he says, like no other in the world.
We've seen about $2 billion in the last year, and that's just in cash.
And don't think it's the same old Nigerian prince scheme.
Really what these are really finely tuned, sophisticated schemes that are targeted to separate you from your money.
He says the West African attack is all about mind games.
This region is far more focused on that social con, on that trick.
And he says those mind games are used by the area more than countries like Russia or China, who have more of a technical or scientific approach. It's all about hooking you in with tidbits they find on social media and playing with your mind to send money versus sending out just a faceless malware attack. For Nightly Business Report, I'm Andrea Day.
And you can head to our website, nbr.com, to read more about scams such as this one.
That's scary. That does it for us tonight on Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow night.